Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 17th of September. Starting off with the FTSE, which is looking rather perky at the moment. We bounced off the 50-day line there, 82.30, at 82.40 now, and heading for, hopefully, the top of the recent range, 8400 plus, by the end of this month. If we do break down, then the lowest we're expecting at the moment is 82.10, and the floor of that rising trend channel from last September, and obviously below that would be the floor of the broadening triangle from back in May, 80.20. But at the moment, the rising 50-day line and the double, triple bounce off it, it looks as though 8400 is the area to look forward to. By the end of next month, if everything goes right, we could be at the top of the channel there, 86.75, just in time for the autumn statement / budget at the end of October. That obviously doesn't quite add up. Moving on to the DAX, and here we've got a situation where market's still stalling at the top of that gap there, 18,700, looking for an end-of-day close above that to give us 19,000. If we do progress here, then the top of the channel there, currently heading for 20,100, that's a channel there from back in October. At the moment, the downside hopefully limited by the floor of the channel there, 18,300. Worst case is that we need another test of the 200-day line, 17,800, but it doesn't look like that will be happening given the support there near the 50-day line. Next up is the Dow, and I believe we had record highs there yesterday. Looks so easy at the moment, that rising trend channel from back in September last year. Top of the channel there, 42,800, and we're looking for that by, or we were looking for that by the end of next month. Might happen a bit earlier than that, given the way things are going. And obviously, the higher the market is, the better it is, perhaps, for one of the presidential candidates. On the downside, 50-day line there at 40,400, hopefully the limit of any downturn, as we saw twice, or seen twice in the last month, both at the beginning of August and the beginning of this month. Moving on to Bitcoin, which has been toying with the 60,000 area, or it was, but we've slid off the falling 50-day line, which is not a good look, and we still have the risk of a test of the floor of that falling trend channel from the end of February. Now pointing at 51,600. That's destination while we remain below 60,500, basically recent support for this, recent resistance rather for this market. The other point to note at the moment is the way that the 200-day line is now starting to fall, which is not a good look in terms of the technical, so we'll need to rebound very quickly within the next week to turn that particular development around. But that area, that the 200-day moving average and 65,000, the maximum we're looking for at the moment. On to gold, and here we're still up and away above 2,600, which is fantastic. It hasn't really reflected itself in small cap gold stocks, but maybe one day next year it might. 26.74 is the top of that rising trend channel from December. We're looking for that by the end of next month. If we're really lucky, it might happen by the end of this month. And the upside value while we're above the August resistance, previous record highs, 25.60, 25.70. Onto the stocks, and not that many to choose from, and the ones we're choosing are not necessarily that good either. Here we've had a horrible turnaround from Avacta. We had the 2-day, 3-day push through the 200-day moving average, but it was falling, and we've also been warned before that this market tends to fade at the 200-day line. We've had failures at the 200-day moving average. So this was a bull trap through the 200-day line. The end-of-day close back below the 200-day line and the 50-day moving average yesterday, I suppose, really the signal that all was not well. It was also a key reversal down as well for the market. So bad start to the week. What we'd like to see now, I suppose, is at least an end-of-day close back above the previous support there at 64 pence. We're below that now. Otherwise, we could see a move down to the low 50s, which was the August support for this market. But rather strange, given that we're in the run-up from of the update from the company at the end of this month. So one would have thought there would be a squeeze higher on that basis. Moving along to a rather happier situation at the moment, which is Blackbird, and here the share is making progress We've got a rising 50-day line there, and I think we've actually got the 200-day line starting to move up as well, so it looks as though we should at least be able to get it to get the shares up to 8.5, 9 pence by the end of this month, and perhaps a bit more given the way that we had a higher low there for August and September. Upside valid here while we're above 6p on that basis. On to Bluebird, which maybe is responding to the better gold price. Here we've got rising 200-day line. We've had 4 bear traps from below the 200-day line there at 0.93. Above that, the obvious initial target there at the 50-day line, 1.12 pence, but could eventually get up to the top of that rising trend channel from March at 2 pence plus by the end of next month. But at the moment, probably just looking for the 1.2, 1.3 areas. That was support on the way down. Speaking of support, there seems to be something coming in there for Eurasia, which obviously came back a week or so ago. Here you can see that we're still finding support above the 200-day moving average at 1.9 pence, and if you're a fan of the stock, maybe that is what you are clinging on to as a positive sign. But what we really need here is an end-of-day close back above the 50-day moving average, around 2.3 pence, to give us the chance of a retest of 3 pence plus later this month. On to GSTechnologies, which has behaved itself rather well. We've broken above the initial September resistance there, 0.78. Above that, the initial target here, 0.95, looking for 1.4 pence perhaps by the end of next month if everything goes well. And look, at the moment, it does look as though we have a decent U-shaped turnaround for the shares, backed by a rising 50-day moving average. On to Helium 1, which is looking slightly precarious at the moment. 2 favourite stocks at the moment on the edge, obviously Avacta and this one. What we don't want to see really is an end-of-day close back below a penny, as that was the support area back in July, and that was neckline support. Ideally, we get back above the placing price, recent placing price 1.09, pretty quickly, and then head back up towards the 50-day line near 1.35 pence. But the risk is if there is sustained price action below a penny, the next level down here would be July support 0.74. So that's a scenario presumably people in the stock don't want to see. The other negatives, or the negative, is the way that we obviously failed to fill that gap, and we've actually found resistance at the floor of that gap, which tends to be negative, as well as the way that we have both the 50 and 200-day moving averages falling. That means we're in the run-up to a dead cross, and obviously that is pressurizing the situation. Moving on to Hemogenyx, which is a happier situation, and here you can see that after a slight retracement yesterday, there's a decent hammer candle so far today. Initial target here around 1.7 pence, above 1.7 pence, looking for a move up to as high as 2 pence by the end of this month. But the key here, staying above 1.55 pence, which was, or 1.6 pence, which was the June resistance for the shares. On to Hummingbird, where there seems to be positive M&A developments. So we're sort of breaking, it's a slow break of that resistance line there from this time last year, around 9.5 pence. We'd like to stay above that so we can get a move up to 12.5 pence by the end of next month, which is the March resistance line projection for the shares. But ideally, whatever happens, we stay above the 200-day line, 8.9 pence. On to the last two, and the first one is MetalNRG, where it was asked what would happen if the shares beat 0.57, or what the next target would be, and the answer is, if we do that, which at the moment is still obviously up for grabs, the next level up is the old July 2021 resistance around 0.65. But at the moment, MetalNRG in that rising trend channel with 0.57 as the top, and we're looking for that while we remain above yesterday's support area around 0.43. Finishing off with Phoenix Copper, which seems to be trying to revive itself after 2-3 months in the wilderness. Here you can see that we are now breaking the 200-day moving average at 17.4 pence, and we've broken a line of resistance there from June around 17 pence. The longer we stay above 17, the greater the chance of a move up towards the 26 pence area in the top of that rising trend channel from back in January. The only point to note is that obviously, as we saw with Avacta, just hitting the 200-day line in a bear run can actually be the sell point rather than a trend change point. But so far, looks as though we can keep an eye on Phoenix in a positive way. That's it for me today. More updates tomorrow.